Hi, welcome to the Market Alert for Tuesday, the 12th of April 2016. And just before we start, let's have a look at the main event from yesterday, and that was Yellen's expedited meeting behind closed doors in secret with Obama. And what it did for the market, well, absolutely nothing. I was hoping that she was going to say that she was going to resign or something to that extent, which would have been great because the market would have really had some volatility. But no, it's normal service as usual, the usual rhetoric and whatever that you get following these meetings prevailed. But I do like this last paragraph here from Zero Edge, and this would be great if somebody would actually do this. Of course, for the actual transcript of what was said, we will have to rely on some conscientious White House leaker putting it on BT torrent. But here is our modest attempt at translating what was said and what was not said. No market crashes allowed until November, of course, to tie in with the election, so Obama leaves with an unblemished record of pumping the markets and having the best stock market rally in history under his stewardship, and of course Yellen's as well. Well, we've seen that since August last year when we had the 1,000-point drop in the pre-market session, and they've held the market ever since then. So it wouldn't surprise me if that wasn't the official line, to be perfectly honest with you. So yesterday the market moved higher. Initially, we saw the market drive through the 20-point target there, which allows us to actually trail. You can see it driving through, and then we start trailing the stop, and you can see the market coming back to the 20-point scalp and stopping out the trade. As I said in Monday's market alert, the short side is now the best side because the buy side has been failing and certainly failed on Friday, and you can see the acceleration here as well as the market move lower, trading down and again driving through the scalp, and this time being able to trail down. You see the market taking out the trade down at this level of 17,632. If I'll just do a quick calculation for you, I actually did this trade but at £6 a point, which is 400 and odd pounds, but it was a 55-point trade there for this market and for this particular trade. So there we see the market moving lower, and then of course we got into the sideways bit waiting for the announcement from the Fed. Sent out a note to say that I wasn't going to trade for the remainder of the day, and that's exactly what I did. I just left it. I sat around here watching the market, waiting, and then eventually the market did move lower, but that was as we headed into the evening session. In the daily chart, a very interesting picture because the market is really stuck in this sideways range, which has sort of come about with the market not knowing what to do since we had the FOMC and also the recent non-farm payroll figures. Let me just remove that one and pop that one in there. So there you can see the sort of sideways range that this market's currently trading in, and it needs to break out. And I think the downside is more likely. I could be wrong, but the downside is more likely. And again, if you look at these three bars here in the volume, you can see it's increasing. So there is some selling around in this market, moving prices towards the downside there. On the news front today, what have we got? Any Fed bods being wheeled out for today? Let's have a look. Nothing really. US 130 import prices. I'm not really going to be too concerned about that. So difficult one to call today, but I would, if there's going to be any momentum, it's going to be towards the downside now that Yellen's packed a briefcase up and left the White House, and there's no other Fed people out. Then the market is free to do what it wants to do as well. On the implied volatility front, well, that is, of course, until they come in and mess with the market if it does start to slide. So 1396 up again during yesterday's session. You can see that in the chart there, heading back towards the 15% target there. We've certainly crossed the line now, seeing an increase in the implied volatility, but we need the market to drop. So again, if you're wondering why the market hasn't dropped and the implied volatility has increased, what's going on here is that the options traders, the sellers of the options, are marking the premiums up in anticipation of that event. And also there was another article which I saw yesterday, which is an interesting one, that came from Deutsche Bank as well. And that was also saying that we are heading towards the end of the debt cycle, if I can find it. Can't remember where it was, but it was a very interesting one. Oh, this is just ridiculous as well. Bernanke, helicopter money may be the best available alternative, dropping money to people as opposed to the banks. It's just delusional, trying to keep this Ponzi scheme alive. It should just collapse and then restart, frankly. I mean, especially when you've got crooks like this. Goldman slammed with 5.1 billion fine for serious misconduct in mortgage selling. That took a moment or two to get around to being fined, didn't it, 8 years ago? And for some unknown reason, I can't see it, but it was basically saying that Deutsche Bank said, here we go. But Deutsche Bank says we'll pass the point of no return in the default cycle. And this is interesting coming from a bank that's seeing its share price slide. You want to have a look at the banking index as well. That's on the slide, RBS as well. So interesting a few weeks ahead, to say the least, as we're heading towards the selling may go away situation as well. But again, I still think the next 2 weeks we'll see a lot more activity than possibly in May, because the lows in the implied volatility. The Fed's out of the way now. There's no FOMC meetings. She's had this secret meeting with Obama. That's out of the way, so there's not a lot. So the market is sort of free to do what it wants to do, unless the plunge protection team are going to come in and actually try and support the market there. Right, that's it for today. I will see you in tomorrow's edition. As ever, I will let you know if anything's going on. I won't be trading the evening session today. It's Tuesday, as you know. And other than that, thanks for watching. See you in the next